Talking about India, we have our Indian basket, as I said, which are these GDRs. It's not relevant for you, but this is just to show you what since 2000, the Indian equity market in total return and in dollar terms have been doing extremely well. And I think it has been quite a big surprise to many that, the pandemic and with the very terrible COVID waves in India, that you would have seen an equity market that was just blistering and, moving to a new all-time highs. But it just tells you that the market is getting extremely confident in the long-term prospects of Indian companies. And the IPO pipeline is also getting increasingly interesting, with a lot of new technology companies coming to the market. And we published our Indian basket back in March of this year. That was a very good timing. It has been an extraordinary, lucky and good call that we have had with our clients. If you look at the Indian equity market, it's priced at, if you look at a 12-month forward basis, it's a little bit more expensive than the US equity market, but not much. And I think if you look 10 years ahead, I think India has a pretty good probability that they will deliver higher returns than the U.S. equity market. But you're an investor, you sit in India. I think if you are an investor in India, I still think, even though you have a good equity market, I think it's really worth investing globally as well in U.S. companies. So what you get if you invest in U.S. companies or U.S. equities is that you can find extraordinary technology companies with exposure. A lot of Indian technology companies are not very big on the international stage, but you can find US and companies that are very big and very, very, very high quality. In Europe, you can find companies with exposure to green technology. Some of these newer, greener energy companies within hydrogen, etc. So I can really encourage you to look outside your domestic equity market for inspiration.